Good afternoon, traders. This is Christian from Hertz Market Trade Group, and this is your end of day market recap for Wednesday, February 17th. Well, themes of the day, we will talk about these. We'll also talk a little bit about the VIX. We'll talk about some macro things, as well as the economics. Before we do any of that, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer right there. So where did we finish for the day? What stood out? Well, the small caps, they were up 1% for the day. They were kind of the one index that was teetering on possibly breaking down. I want to go to those first, and then we'll talk about a couple of the other themes. But here's what I was referring to, right? You had to move into the 20-day moving average. The other indices did not do that deep of a pullback. They held up a bit better, but it kind of goes along with what we've been seeing since the start of February, is that the breadth hasn't been great. We've seen, if you look at things like something that I quote in a lot of these end-of-day videos is the NYSE, the McClellan Summation Index, right? We know that that's been trending down. What does that mean? That means that there's been more decliners versus advancing issues, and that's been the case for the better part of February. So we're watching to see if that changes. Breadth was a little bit stronger today, but wasn't crazy strong as what we saw back in January. So that's kind of interesting to me. Regardless, the small caps, and the indices are holding where they need to, right around that 20-day moving average. Not much to really see here on the 1-hour chart with IWM. We are inside value. There is an 80% rule effect. 195.68 is going to be your resistance for the week. That would complete the 80% rule. Interesting. We'll go over to the NASDAQ next because the Qs. So again, not as deep of a pullback, 20-day moving average in here. Remember, the top of values all the way down here, but this is starting to kind of come back up again. Haven't taken out the highs from where we were back in the beginning of the month, but like I said, we haven't really been seeing really strong participation or strong market breadth. But the last couple of days, the dip, that little dip was bought, right? And going back to this 1-hour chart, the 80% rule is now complete, right? And if you're not familiar with the 80% rule, please see my pinned tweet. We go into detail about what the TTG market webs are, what volume, how we use volume at price, right? And our value areas on multiple time frames. 309.50 is a level to watch now. So that's complete for the week, right? 80% rules when you enter a value area either from below or above, and there's an 80% chance that it fills the whole value area. Again, not 100% chance, but 80% chance. All right. The S&P that already fulfilled that 80% rule yesterday morning, but it did explore the bottom of value as well, right? So that also held where it needed to, right? And you go back to last Friday, right? That held, that bounced on support. Again, we're not above that version point of control takeout, but we're kind of in this consolidation area. You can see I've got a trend line drawn and we're above that. Again, that support is going to be 40.71, right? We're moving in the right direction, or we at least have been the last couple of days. So, I wanted to talk about too, I got a few more things to talk about in this video, specifically the high growth and what happened in the ARC names today, which I thought was really interesting. But before we get into that, let's talk a little bit about the economics. So retail sales coming up higher than expected, 3% versus 2%. A couple other data points that came out, you could see in front of you too. Tomorrow, we do get the PPI report. So that's another gauge of inflation that comes out at 8:30. Well, I think, one thing that was absent today was Fed speakers. I don't think that there was any Fed speakers today. We will get some tomorrow, but we'll get both the PPI and we'll also get housing starts, building permits, initial jobless claims. So a whole nother slew of economics that come out. I mentioned there was no Fed speakers. Tomorrow's a different story. They're back at it. What do we got tomorrow? We got four Three speakers, but one speaks twice. Mester speaks at 8:45. Bullard, who must be locked in a closet someplace. I'm kidding, because we haven't heard from him. He's speaking tomorrow, discusses the economy and monetary policy. That's at 1:30. That's probably something to note too, because I think he likes to stir the pot personally. And it's odd that you haven't heard from him. So he's got to be bottled up, and he's got to be ready to kind of you know, shout from the top of the building or something. I don't know. Sorry, I'll stop making jokes and I'll move on. Just giving you the information to potentially watch for tomorrow. And I just wanted to talk about this economics for a minute, right? One of the things, and again, I'm not looking for a pat on the back, but I'll just give a quick rant on this. One of the things that we've heard about for now just about a year is there's a recession coming. There's a recession coming, and it's almost, if you remember when you were a kid, I don't know if they still have this story, but it's the boy. It's the analyst that cried recession. It's the boy that cried wolf is what we heard when we were younger. So one of the things that I told TTG members, and I think I also said it on Twitter, is get out of your basement, instead of like listening to those 4-hour Twitter spaces, which will are not good for you, in my opinion, to listen to the same viewpoint for 4 hours. Go outside, go try to get a restaurant reservation. Check out the air, if you've been traveling, what's going on at the airports, wherever you go travel to. Is it tough to get a reservation there? Is it a city? Is it a beach that you're going to? Are they busy? Because what I've noticed and what I've been kind of talking about is that, and again, I'm in New York City, so it's different, being in New York City than other parts of the country. But what I see is it's impossible to get a reservation to go get dinner. If you don't book a reservation, into like a place that you really like to go a couple weeks ahead of time, you can't get in. And that's been the story now for a while. So I've been saying these things like, take a walk outside and observe these things and make your own judgment. Don't listen to these folks on the 4-hour Twitter spaces, right? They will pollute your mind and make you think that there's something else that's been going on. Now, am I saying that we're never going to have a recession? No, I'm not saying that. I'm just saying that sometimes it's just better to make your own observations, right? And do your own personal analysis rather than listening to somebody else. I was going through my Twitter feed, before I did this video, and it's the same thing. Like, people constantly trying to convince you of their narrative, right, and scare you. That's not good. Good analysis to me is taking a look at something and looking at kind of both sides of it, right, and then trying to understand what that information is telling you. So in any event, right, and macro information is good, but you want to be objective in your analysis. So that said, speaking of the macro stuff, I would pay attention to if that number is going to be higher than expected. So far, this market has been kind of brushing off some of these things. If you've been watching my videos, you know I'm concerned about interest rates. But it's just the fact, I think right now, why isn't the market being affected by interest rates going higher? I mean, that's a very important question, and I don't have the answer to that right now. It just seems like that is one piece of the puzzle. It's one factor. But if there's, the old saying is, if there's more aggressive buyers in this market, it doesn't, that kind of takes a back seat, right, until that kind of slows down a little bit. And another factor I would say is earnings. The numbers that are coming out for some of these names that are reporting earnings are just much better than expected, right? Perhaps they did lower the bar enough so that it's an easier bar to jump over, right? So again, I could kind of talk about this and give you my own narrative and so forth, but watch these earnings reactions. It just kind of tells you that maybe that there's a lot of investors just on the wrong side, right? One of the things that I've been talking about is, what's been going on in the semiconductors. Cadence made a new high today, right? Lam Research, not Lam Research, sorry, Lattice Semiconductors, right? I mean, this is, to me, it's a little bit different, because these names don't have huge high short interest. So, one of the argument has been is, hey, there's a lot of short covering, which I do think is still going on. You see some of these earnings reactions afterwards. I mean, look at what TDD did today. It was up 33% today, right? So it just shows you that there are investors that are caught on the wrong side of the fence, right? That's also a factor that is going on. So I mean, right, and this creates effects not just for this company, but any company that's in this business is kind of is taking off. So we could talk for 20 minutes, a half hour, about all these market moves that we're seeing. But a couple things that I noticed too, like this is another name, right, that kind of came out and just blew through upside, not resistance, but took out the all-time highs, right? And you look at this weekly chart, I mean, this is a really nice thing. This is Encore Wire, right? Very, very strong, right? And there is an ETF that I found. I talked about this ETF, and I actually own this ETF, right? So I'll bring this up here in Bloomberg so that you can see, but it was the biggest mover in this ETF that I put on I think about a week ago, right? This is the American Industrial Renaissance ETF, right? And if you look at some of the companies in here, you'll see that it's a lot of the smaller cap names, right? Like a Hubble. Sorry, I don't think that's a small cap name, but it's a lot of names that are very close to 52-week highs. So yeah, if you look at some of the movers in this thing, right? Wire made a big move. ARRY Solar got going today. I mentioned Hub already, that was up 2.3%. So pretty strong, right? It's this group of, I thought that was an easy way to trade some of these names, is to do it via the ETF. But even something like a GE, which is has an aerospace business. I've been very bullish about the aerospace group. I'm long Boeing, but I'm also noticing strength in so many other names that have aerospace exposure. Like another name too is this Howmet Aerospace, all right, which is also made a nice earnings move. So I'm trying to remember when I've seen so many moves like this on earnings, and it's pretty hard to kind of go back. And again, it just kind of goes to the expectations coming into earnings, right? We've heard a lot of people who've been right about the market, right? Some folks from Morgan Stanley just were preparing the market, saying that it was going to be a horrible earning season, right? And that's not what we're seeing at all in terms of the expectations and some of the moves. So I mentioned I would talk about the VIX too, right? So we go back to my spreadsheet here, right? So in all of this so far, this summary, right? It doesn't mean just like abandon discipline. I'm just kind of calling out some of the observations that I'm seeing. This could change, right? And I think that you have to be kind of prepared for that. You have to be disciplined. But what I really kind of tout a lot is to be on the right side of the market, right? Don't argue with the market. Don't argue with the price action, right? Your job as a trader is to look for opportunities and to make money and limit your risk, right? So that's the bottom line. Again, it's not to have a perma viewpoint and not change, right? It's to change with the market, right? And to pick up on some of these things. And that's what I try to do in these end of day videos. So the VIX, right? Why? So first, so there's a couple things I want to point out with the VIX. First of all, a lot of people think they know what the VIX is, but they don't actually know. Why do I say that? I see a lot of people calling the VIX the fear index, the fear gauge. It doesn't measure fear, right? That sediment does things like that. What the VIX measures, and again, if you don't believe me, or I talked about doing your own analysis in the beginning of this video, but you could just Google what the VIX is, right? Understand what that means. It measures implied volatility of 30-day options. So no, it doesn't measure 0-day options, right? It measures the implied volatility in 30-day options. That's the only thing it's ever done. It doesn't do anything else. So looking at the VIX, right? Because I tweeted this out, about, I think it was not last weekend, but the weekend before, saying, hey, the VIX looks like, again, I wouldn't necessarily chart the VIX, but I would just notice like it's staying around this 18 to 20 level and it's not getting back above it. Well, why is that to me notable? Because in these other situations that we saw in 2022, the VIX would go down to 18 and it would just shoot back up. Right, so it's not doing that. So it kind of looks like it's doing something a little bit different. It's kind of settling in, perhaps telling you that there is lower volatility. Right now, why did the VIX rise so much last week? Well, because there is something that's called volatility crush, right? When there is a big event, right, that people are really worried about or anticipating something big, that this happens in individual names, right? When you have earnings, right? If you trade options at all, right? And if you own an option, right, into earnings, right, that option there is going to have a certain implied volatility, right? Let's say that the name doesn't do anything spectacular on earnings and it's unchanged from when it reported earnings to the day after. And let's say like a Twilio, right, which is up after hours. But the next day, what will happen to the option premium? Right. Well, it will go down significantly because of that event is now the cat is out of the bag, right? It becomes known, right? So there's not so much built in, the unknown becomes known, right? And implied volatility comes down. So that's kind of what we had. Did we have a big event this week? Yes, we did. We had the CPI report. Everybody was glued to their screens for what the next inflation reading was. So that jacked up the premium, right, in options, and that's why the VIX was higher. Now, as soon as that data came out, what happened? Right? Well, the VIX came in because that information is now known. The unknown is now known, right? So that's it. And we're kind of seeing that drain out. And the VIX doesn't move exactly opposite to what the market is doing, right? Just because, the S&P was up just 30 basis points and the VIX was down 3.6%, just tells you going out 30 days, the market is not pricing in big volatility. That's all it's telling you guys. Of course, there was a VIX, I believe that there was a VIX expiration as well, but I'm not looking at VIX futures, right? I'm just looking at the VIX itself. So again, try to understand some of these concepts and don't go, hearing people say that there's no more fear anymore. It's not the fear index anymore. I saw this on Twitter. I'm like, you got to be kidding me. With some of these things that you see on Twitter. So the beginning of the video, I said, go outside, do your own analysis. Also the same thing, like if you see something posted on Twitter, it doesn't matter how many followers they have. It doesn't mean that it's going to be right? Question it, do your own research. All right, so back to this video has turned out to be too long already, but what's going on with the ARK names, right? Well, don't think about the meaning too much. Yes, it's called an innovation ETF, but what were the names that moved up in this thing today? Right. Well, Roblox was up 26%, right? Coin was up. There's a big move in Bitcoin, right? So of course, some of these names have huge short interest, right? Roku was up, going into earnings, and they're up after hours too. So there's a couple of these things. I mean, there's fundamental news that came out with Roblox today, and a couple of the other names. So does this mean that anything other than such a big move today, up 6%, but this is also still not above those beginning of the month highs. So, kind of the conclusion of this video is, pay attention, I think, to breadth. For now, how I'm kind of trading this market is when I see breadth that's not great, I try to day trade a little bit more. And when I notice things like interest rates going in higher too, it doesn't mean you can't participate in this market. We're getting some days like this where they're trending days, right? Not all the move is happening in the overnight market. So, enjoy that while it lasts, because it doesn't always last where you have these trending type days. So, that's basically it, guys. I would say just be on the right side of the market and and manage risk appropriately. Take exposure off into nice days, nice trending days like this. All right, guys, that's it. Have a great night and see you tomorrow.